Hello everyone, we are Team 管院elite 只想eat. Today, we're here to present about the remarkable journey of PortageBay, an ESG data analysis company that leveraged AI to solve clients' pain points and develop sustainable competitiveness. Turning out to page 2, let's take a look at the key issues first. PortageBay is now facing a crucial decision to suggest its clients to include or exclude Amazon and Goldman Sachs into their ETF. We will suggest them to include, based on the external benefits they can create for investors. In the next part, we're going to analyze the opportunities, main competitors, and 3 biggest challenges PortageBay are now facing. The first one is how to add more value for its customers. The second one is how to differentiate themselves with other competitors. And the third one is how to balance between profitability and sustainability. Therefore, we propose 3 strategic solutions. The first one is to build up a cross-border real-person inspection system. The second one is to offer customized consulting services. And the last one is to add a new calculating tool on our website that indicates external benefits. And the last part, these strategies can bring impact, such as the gross margin will be boosted by 30%, and PortageBay can also create brand differentiation, scalable revenue stream, more social impact, and also become the leadership in this industry.
Next, let me provide an overview of PortageBay. PortageBay was founded by 2 former BlackRock executives. The company specialized in a sustainable analytics platform that uses AI to analyze ESG data. PortageBay has 3 core purposes. First, reorient capital towards sustainable outcomes while generating higher returns. Next, tell how sustainability drives value creation. Last, help investors achieve a greener future and maximize ESG-related returns. Regarding their ESG data, it spans a wide range, including sustainability reports, policy documents, auditor reports, and more. Next, let's talk about the key issue. Should Amazon and Goldman Sachs be included in ETF funds? Starting with Amazon, there are 2 main questions. First, environmental performance. Clients want to evaluate Amazon's ESG metrics to its valuation and competitors. Amazon's carbon intensity shows a downward trend, and its renewable energy usage is more than competitors like Walmart. This indicates strong environmental performance. Next, ESG reputational risk. While some employees have accused Amazon of greenwashing, the company has stated that it used accurate data, transparent methods, and third-party certifications. Furthermore, we can also solve the problem of greenwashing through our solutions, which will be mentioned later. Based on this analysis, our answer is that we think clients should include Amazon in ETF fund.
Next, let's evaluate whether to include Goldman Sachs into client use portfolio. Goldman Sachs demonstrates strong gender diversity initiatives, making it a viable candidate for inclusion in gender-focused investment portfolios. Their commitment includes goals of 50% women analysts and 40% women VPs by 2025, with current progress showing 49% and 33% respectively. Additionally, since 2021, Goldman requires IPO candidates to have at least 2 diverse board members, one of whom must be a woman. This initiative has led to 88% of diverse board placements, with over 75 appointments since 2020. While challenges persist in achieving upper leadership parity, Goldman consistently outperforms peers in gender-focused equity fund rankings. Overall, the firm's measurable progress supports its inclusion in ESG-driven portfolios. Next, let's analyze PortageBay's competitors. PortageBay distinguishes itself in the ESG landscape by outperforming competitors in key areas of purpose, service differentiation, and diversity and inclusion. While ESG Flow consolidates data and facilitates compliance through AI automation, it lacks the engagement and sustainable analytics features that set PortageBay apart. Key ESG simplifies reporting but primarily focuses on internal data management, whereas PortageBay extends its value by integrating ESG analytics into investment strategies. RepRisk excels in risk monitoring but lacks PortageBay's automated reporting tools, resulting in a steeper learning curve. PortageBay's competitive edge lies in its ability to establish a strong link between sustainability and value creation, offer customizable ESG insight, and leverage a globally distributed team to provide localized solutions. Next, let's delve into the company's opportunities. Geographically, Canada shows strong demand for sustainable funds, providing a prime market for immediate expansion. Meanwhile, U.S. skepticism can be addressed through compliance-driven solutions that align with regulatory expectations. Additionally, targeting stable ESG-driven markets in Europe and Asia ensures diversification. PortageBay has significant opportunities to expand into untapped markets by targeting family offices, foundations, and insurance companies, sectors that show low ESG adoption rates. The chart highlights that these sectors report the highest levels of no and no-intention responses regarding ESG policies, signaling potential for growth. This gap represents a strategic opportunity for PortageBay to explore potential new client development proactively.
For the challenges of PortageBay, we think that it can be divided into three parts. First, enhance value. How can PortageBay improve its product and service to enhance the value it provides to users? Next, create advantage. How can PortageBay create differentiated, sustainable, and competitive advantage? Last, balance profitability and sustainability. How can PortageBay assist its clients in maximizing returns while aligning with sustainability principles and achieving sustainability goals?
Next, it is our solution parts. We propose three strategies respectively in response to three challenges. To begin with, Solution A. PortageBay should establish a cross-border real person inspection system with PwC to ensure the authenticity of the ESG figures provided by each company. Here are reasons why we choose PwC instead of other firms. PwC offers the service of carbon footprint verifications. Also, PwC has the largest number of locations among the Big Four. We developed the cooperation into three depths, as is shown on the slides. Then, it comes to Solution B. Provide customized consulting services and pricing strategy through price discrimination in economics. On the left, here is how our consulting system works and the relationship between clients, PortageBay, and PwC. And on the right, we use the concept of price discrimination to determine service fee aiming to maximize our profits. We focus on second and third degree price discrimination. We will further illustrate third degree price discrimination. Below are consulting services typically sought by groups mentioned above. First is a retail investor. They seek services such as finance planning and wealth management and tax consulting to tailor investment strategies and to find tax-efficient strategies. Second is the fund manager. They seek for services such as regulatory and compliance services to navigate global regulations like ESG standards. Third is the business. They seek services such as sustainability advisory to incorporate ESG goals into business investment strategies. Lastly is the family office. They seek services such as alternative investment to evaluate private equity, real estate, and ESG opportunities. Lastly is Solution C. PortageBay should add a page in its websites, which contains a calculator that helps users calculate how much monetary and non-monetary value their sustainable investment creates. To illustrate how the idea works, we've come up with 3I slogan, which is identify, incentivize, and increase. On the right side of the page are type of measurable external benefits they can create, such as profitability of carbon trading for E, environmental aspects, employee satisfaction scores for S, social aspect, and board diversity for G, governance aspect. These measurable outcomes provide evidence of the positive externalities generated by sustainable investments.
Tracking these metrics allows stakeholders to assess the impact of their investment effectively.
Now, let's take a look at the implementation of our strategies. The 5-year plan consists of 3 phases: negotiation, execution, and optimization. And here's the timeline of our plan. We believe that in 2027, all of our strategies can be executed. And we also listed out the risk we might face. The first one is under the system of spot checking. There may still be companies that do not provide accurate data, have not been inspected. To mitigate this risk, we can establish a penalty standard to prevent this from happening. And the second one is that consultants may ask for too much revenue split. But actually, the details in the contract are all negotiable, and we can restructure the contract. The last risk is that some external benefits are actually unmeasurable, and the calculator may not satisfy all users' needs. To mitigate this risk, we can optimize our calculator once every month and create a user feedback system. Lastly, this is our impact analysis. We believe that by offering quality services and add more value for customers, our revenue per service and gross margin can increase by 30%. And PortageBay can also create brand differentiation, scalable revenue stream, create more social impact, and build a reputation for being a leader in ESG data accuracy and analysis. Overall, by applying these strategies, PortageBay can definitely solve the challenges they are facing right now, and they can also develop sustainable competitiveness and usher in a more promising future. This is the end of our presentation. Thank you.